This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rose over 2% on Friday as the International Energy Agency said the market was tighter than it appears, while U.S. tariffs and possible further sanctions on Russia were also in focus. Brent crude futures settled up $1.72, or 2.5%, at $70.36 a barrel. U.S. West Texas Intermediate crude gained $1.88, or 2.8%, to $68.45 a barrel. For the week, Brent rose 3%, while WTI had a weekly gain of around 2.2%. The IEA said the global oil market may be tighter than it appears, with demand supported by peak summer refinery runs to meet travel and power generation.
The world oil market may be tighter than it appears despite a supply and demand balance pointing to a surplus, the International Energy Agency said on Friday, as refineries ramp up processing to meet summer travel demand. The IEA, which advises industrialized countries, expects global supply to rise by 2.1 million barrels per day this year, up 300,000 barrels of oil per day from the previous forecast. World demand will rise by just 700,000 barrels of oil per day, it said, implying a sizable surplus. Despite making those changes, the IEA said rising refinery processing rates to meet summer travel and power generation demand were tightening the market, and the latest, accelerated supply hike from OPEC Plus on Saturday had not had much effect.
Moving on to the top news in the energy sector.
Russia intends in August and September to fully compensate for previously producing oil in excess of its OPEC Plus quota, in line with the existing plan, Interfax news agency quoted Deputy Prime Minister Alexander Novak as saying on Friday. Novak was also quoted as saying that the government was still discussing a possible complete gasoline export ban and that the decision depended on market prices in the next few days. Russia has to compensate for overproducing a cumulative 691,000 barrels per day since April. OPEC Plus has been raising production since April after years of cuts to support the market.
U.S. President Donald Trump ramped up his tariff assault on Canada on Thursday, saying the U.S. would impose a 35% tariff on imports next month and planned to impose blanket tariffs of 15% or 20% on most other trading partners. In a letter released on his social media platform, Trump told Canadian Prime Minister Mark Carney the new rate would go into effect on August 1st and would go up if Canada retaliated. In a post on X late on Thursday, Carney said his government will continue to defend Canadian workers and businesses in their negotiations with the U.S. as they work towards that deadline. Next, we have the top news in metal markets. Copper prices slipped on Friday as investors anticipated the 50% tariff on the metal due to be imposed on U.S. imports is likely to erode demand, and as speculators unwound positions. 3-month copper on the London Metal Exchange was 0.4% weaker at $9,664 per metric ton by 1600 GMT, down from the 3-month peak of $10,020.50 touched on July 2. The contract was on track to shed about 2% this week, a second weekly decline. Given that you have this punitive tariff in the U.S., you will have a dampening impact on demand, said Karsten Menk, analyst at Julius Baer in Zurich.
Iron ore futures rose on Friday and were headed for a third weekly gains, underpinned by renewed hopes that top consumer China's crackdown on a price war will pave the way for another round of reforms to curb steel overcapacity. The most traded September iron ore contract on China's Dalian Commodity Exchange closed daytime trade 1.8% higher at 764 yuan, $106.56, a metric ton. The benchmark August iron ore on the Singapore Exchange was 0.14% higher at $99.15 a ton as of 0722 GMT. Both benchmarks have risen over 3.5% so far this week.
We will now look at the top news in the agricultural sector.
Arabica coffee prices hit a 10-day high on Friday as investors focused on Brazil's threat to retaliate should the Trump administration proceed to impose 50% tariff on Brazilian imports, but receded late in the trading session to end lower. Brazilian President Luiz Inácio Lula da Silva said on Friday he wanted to find a diplomatic solution to the U.S. tariffs threat but vowed to reciprocate like-for-like if they take effect on August 1. Brazil is the world's largest grower and exporter of coffee, while the U.S. is its biggest client and the world's largest drinker of the beverage. Out of all the coffee the country consumes, no less than 33% of it comes from Brazil.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.